I'm April Malloy, and so, you know, our total solution to women out of welfare is women empowerment. One is, you know, we start with, you know, getting the counseling, doing the, you know, a lot of them doesn't feel good about themselves. We empower them and understand where they came from, why they don't feel good about themselves, because a lot of times they get on welfare and they get in a rut. And so a lot of times, like, you give someone a fish, they have the fish for the day, but they don't know how to fish. So we teach them how to fish. We teach them how to become bosses, how to own their own business, how to start their own business, and how to really become successful. Awesome. And I was a foster kid, mother of almost a dozen children. And if I could do it after being homeless, they could do it too. And this is all about breaking the walls down in a man's world and literally showing them how a woman does know how to do construction. I show engineers and architects how to build. And, you know, I understand everything from electrician to plumbing to mechanicals to BTUs, gas lines, understanding what size piping to the Ansel system calculations, you name it. So that's going to spell, obviously, on the show, you know, what we're all about.
Awesome.
Show other women that they too can do it.
When is the show airing?
We're doing the pilot right now. So we're going to do our launch party on August the 17th. There's this Texas University amazing restaurant, our purple truck, that's going to say she's the boss. She gets her done, a woman with an iron back. You know, it's on the red carpet. Awesome. And I'm riding in on a horse and cowboy boots.
Are you really?
I am kicking ass in there. And then all the press will be there. So it's really incredible.
Awesome.
Are you featuring any men on the show?
Oh, of course. We're all about our veterans and our Navy CBs. We love them working for our prisoners, but we're going to have an inside boot camp because a lot of these men have ran away from their responsibilities of paying child support. And we need them to be able to accept the responsibilities without running from the court, having to be taken to court, and how to become honorable men.
Awesome. Awesome.
So we'll have our inside stuff going on as well as our women centers going on and taking these women literally out of the streets and showing them how to become a boss.
That's awesome.
That's why it's called She's the Boss.
She's the Boss. So to answer your question.
My name is Scott Einbinder. We have Jordan Kadri here and we have Ari Brusher. We are here from the firm FM Home Loans. FM Home Loans is a mortgage banking firm, not a brokerage firm, a banking firm. It's a direct lender. We have offices throughout the country.
That's great.
Focused here in New York. It's a Brooklyn-based lender, 25 years here. Understand, obviously, the New York market very specifically, the nuances of the New York City market, Brooklyn, Manhattan, as well as we know that everything is very different even within Manhattan. So the expertise is in the New York market. The company's primary focus, obviously, is in residential purchases and refinances.
1 to 4 family?
1 to 4 families. However, the company does do small commercial loans and some niche type of situations that fall outside of your standard bread and butter situation.
When you say small commercial, do you mean only 5 to 6 family now?
No, it can be above that. I mean,
what about a mixed use?
Mixed use, absolutely. I would say that is not the company's area of expertise and specialization, and those loans are typically brokered loans. So the primary focus of the company's business is that residential transaction. So you want to be what your expertise is.
Of course.
That being the case, the company has really, grown exponentially over the past number of years while many lenders have gone out of business and a lot of the big banks have migrated into other businesses. One of the challenges behind the big banks is that mortgage loans are just one piece of their overall portfolio. In fact, most big banks, residential mortgages represents a very small percentage. At a company like FM Home Loans, it's 100% of the business. So that's all the company does is mortgages. But that doesn't make it special. It's really about the personal service, both given to the real estate agent and professional, as well as the client. Today, it's much more than just being a service business. You have to kind of be a value add to the real estate agent out there today, and that's really kind of how the company's positioned differently. I am not a mortgage originator, RA and Jordan are. I'm a real estate speaker and trainer. I'm a national speaker. I live here in New Jersey. Don't hold it against me, although everybody else does.
Oh, you mean you just drove in from New Jersey?
Just-
You're in New York City.
Exactly. I'm always getting in the city. So my role here within the company is I'm a trainer and I'm a real estate educator. I work with all the different brands around the country. FM Home Loans is a client of mine. They retain me to help them build new relationships with real estate agencies and bring value to you. I have very different educational perspectives. I work with most of the top companies here in Manhattan, most of the top companies here in the country. And I've got very different solutions to be effective in that arena of residential business. You know, while there's lots of different segments, you guys are obviously in a segment of business with investors and developers. You know, residential real estate business is kind of something that kind of will always be there. You know, commercial markets come and go or rise and fall. Residential real estate has generally a little bit more stability to it, especially here in the market. So
I would say just the opposite.
Yeah,
You know, no, but it's so funny because, you know, well, we experienced a crash and everything slowed.
right.
So, you know, it's so funny because the real deal this month, like every other article is all about how soft the market is.
Well, listen, you know, soft compared to what? You know what I'm saying?
Right.
If I bought something at $1, it's now worth $9 and now it's worth $6, things are still good.
Yeah.
And again, you know, everyone has a different agenda, and not that I want to be political, we have to sometimes question what we read in the media.
Right.
You know, the one thing I would tell you is that, you know, my dad told me at a very young age, get into either food, clothing, or shelter, because it'll always be necessary.
That's right.
So people will always need a house over their head. They may not necessarily need, you know, 8,000 square feet of commercial space. In fact, a lot of businesses are becoming more virtual. You know, brick and mortar is very expensive. So, you know, kind of if you look at a 5 or 10-year trajectory in businesses, you know, companies are thinking about ways to downsize and lower brick and mortar costs. So,
Oh, yes, you're
if
absolutely.
you're
That's
looking-
why a space like this exists.
right, exactly. So, you know, at the end of the day, you know, residential real estate, you know, will always, I think, have its place. What we're here to do and what we can offer you is not just mortgage banking solutions, which is what we do here, but creative ways to get business, creative ways to get listings. You know, if you, I don't know, anybody here would be interested in getting a $3 or $4 million listing residentially here in Manhattan. I don't know if that interests anybody here.
Of course. Definitely does.
I don't know. I mean, if that's, but some companies may not. Some, you know, we're commercial, we don't want that. But if you're in
Oh,
this,
now let me just correct you real quick.
Yeah.
When I say commercial, a lot of the stuff is actually apartment buildings
yeah, there
and
you go.
not really the commercial side.
Gotcha.
We're
So
doing-
apartment
Yeah,
Yeah,
buildings.
we're doing
Yeah.
the apartment
So-
buildings and 2 to 4 family
Yeah.
rehab,
Yeah.
and that's
Well,
what.
that's really an area of expertise here. We often get buildings condo approved, get them investor ready. So
Yes,
you can
that's
sell them.
what's
We also
so
have
good.
creative ways that we can help developers sell those listings quicker, faster, and for more money. There's ways to do that. There's creative ways to do that, to drive more traffic to the building, and you can use financing solutions as ways to do that. For example, you can offer a preferred interest rate to a particular building by using what they call a seller-funded buy-down on an interest rate. So everybody buying that building is buying at an interest rate a half or 3/4 below the market. It's a great way to get people there.
Let me
So-
tell you what, we have one that we're gonna close on,
Yeah.
within the next 2 weeks.
Yeah,
On 54th, the developer built it, and now to save on the right.
Section 1031.
Yep, yep.
Okay, so he's selling it to someone else.
Yeah.
We hope, I think that they're gonna hire us to sell those condos.
Perfect.
So that's gonna be really the first opportunity that we have.
Well,
To be able to
how many
use you
units
guys.
are there?
23.
23. So for example, we can not only help you come up with some creative financing solutions to drive more traffic to the building,
Do
but
you,
also do some marketing and help you with some cooperative marketing. We have we have a complete marketing department that uses both online and offline solutions to drive traffic. You know, today you have to have both. You have to have good social media and good online traction, as well as offline traction as well.
mortgage you give, do you hold them in the portfolio? You sell?
Well, the company is a mortgage banker. So the way the banking community works today, whether you're Bank America or you're an
You
FM
sell them.
Loans, is whether or not the companies often will hold them for 30, 60, 90 days
Okay.
and then sell them off to the secondary market. You can never control that as a originating company. You know, no lender wants to hold a mortgage for 30 years. So, so the answer to your question is from a real estate agent's perspective, you want to make sure that you're dealing with companies that have the money to lend, that they are making the underwriting decisions within the in-house. You're on the phone with the person, right, issuing the check, and that's the most important thing from an agent's perspective. So we've got some great ideas and great solutions to drive traffic to these buildings and to help your developers or owners, A, net more money for those units, and B, drive more attractions there, which creates competitive bidding, which drives prices up. So, and utilizing marketing, because marketing is often an investment that you have to make as a broker, but having a relationship with a company like ours, we have an in-house marketing department that can help you offer collateral material, flyers, many things that would require both intellectual collateral as well as financial. So that's something that we'd be happy to talk to you about. And we can even have individuals be on site with you during the time frame. So if you're sitting there at the project, if you're doing things, you should have an on-site financial partner there who can generate and ask questions of clients right away. It's just, again, a way to spark the momentum when people are physically looking at situations.
That's
So,
exciting.
One other thing, I don't know if Scott mentioned it, but we also take buildings from the start and we work with the developer to get the buildings Fannie Mae approved.
Yeah.
You know, without that, you can't get a conventional loan.
There's a thing. That's a good point. There's a thing. You know, in order to maximize the financing of the building, right? So if you can do more loans in the building, you can theoretically get more traffic, right? If let's say a building is only steered to a person with $1 million net worth, you're limited. You want to have as much availability. So getting a building, what they call Fannie Mae or Freddie Mac approved, means that you open up the ability for more people to get financing there, which brings more people and drives prices up. So the company will assist the builder or the developer in getting that special designation, which is very expensive, complicated, and difficult, but we've perfected that. So that's another value add that to bring to the table. The other value add that we bring to the table is providing ongoing education. You know, there's continuing education, which is required for your license, and there's what we call credit, which is called money-making credit. We provide, education, ongoing education to you in the field to help, again, bring you up to a level of sales ability within the selling arena. You know, your biggest challenge right now is if I said to you, go out and get a listing and don't come back until you have one, what would you do? It's hard around here to go do it. You need to learn how to do that.
How to canvas.
You'd have to learn how to, well, you have to know how to prospect, how to overcome objections, how to create what I call a value-added benefit. You know, you're dealing in a competitive arena. However, there are a lot of agents in this business, but there's not a lot of competition.
No.
And what I mean is that there's very few amount of people that do it right. So at the end of the day, but you need to learn how to do it. You need to know how to overcome those things. And so my relationship with the company is that we provide that to you. We can either do that here in the office. We can offer you to come into our office in Manhattan. We have an office about 20 blocks away from here on, off of, right on 57th and 3rd. So, it's a beautiful conference room and you're able to come there as well. So, we look at everything as a real partnership. We put up a substantial amount of resources to engage in those situations. And, that's been the secret. There's not a lot of companies that have gone this way in the past 7 years. Most companies have gone this way in the past 7 years. So, you always want to look around and see who has thrived in times. What have they done? What did they do? What did they do to change? You're in the process of rebranding yourself.
Yes.
We as a company believe that you have to constantly reevaluate yourself every month, every quarter. You can never rest, that kind of thing. The secret to the company has been to be progressive, right? They say you should glance back but look forward, So, a lot of people are, and I'm sure people, they always are complaining about the way it used to be, and I only wish it was that way, and you can't think that way.
Anything I can say about business is you have to adapt and change rapidly.
Adapt and change rapidly and implement.
And I think that's the only way to be in it.
One of the things that we think is important is that we know real estate agents, there's a very high failure rate in business. We know that 80 to 85% of people that get a license are out of the business inside of 12 months. Don't want to sound doom and gloomy about that, but you got to look and why. Why is there such a high failure rate in the real estate business? You got to look and answer that question. And, we think it's a couple of reasons. A, there's a lot of people that get a license that should never be in sales because, sales requires a certain amount of DNA to it, right?
Yeah.
So,
yes, it does.
So does an entrepreneur.
Right.
Yes.
So you need that DNA to be able to do that. So that's number one. But we think the other reason why a lot of agents fail is because they aren't trained effectively. There's a lot of companies that give training just for training. We try to bring training that is effective, that works, that's all about implementation and accountability. You know, one of the reasons why people got a real estate license is that they don't want to be accountable. That's the good news, but it's also the bad news.
Yeah.
Right? It's the double-edged sword. You know, if you, like, for example, if there was a meeting today at 4:30 and someone didn't show up, in the real world, they'd be what? Fired. You know, in real estate, no one says a word. So, you know, it's an industry that enables bad behavior. Which is great, which is probably why you're successful. So as long as you don't enable bad behavior, you're in good shape. You know, in fact, the harder you are on people, the more love you're actually showing, okay? You know, people that are hard on you actually care about you. It's the people that yes you who are the ones that are actually sticking a knife in your back. So I think that strength is important, and you want that in your leadership to be able to do that, you know? And so, you know, it's like the parent that yells at you, you know, loves you. It's the one that never says a word and wants to be your best friend. You know, not that they're a bad parent, don't love you, but they may not be giving you the best leadership role. So we as a company are very, very different. There is no mortgage banking company like us. We have a completely different philosophy on the business, a completely different relationship with those in the real estate space. And that's the key today. You know, the question I always ask everybody in this industry is, what's your unique differentiation from competition, and what is your value added benefit? And your value added benefit, by the way, can't be the following: honesty, responsiveness, reliability, track record, knowledge, professionalism. Those are not value add. Those are what I call value expect. All right? I don't want to give you extra points for doing what you're supposed to do. Okay? It's like when you walk by a store and you see, or a restaurant, you see fresh seafood. I'm like, fresh. Like, it better be, right?
So funny. I was just literally this morning, that's right from the news this morning, because they were talking about Trump on that. They said how great of the speech it was. And then the other person said like almost verbatim that exact thing. Like, okay, well, we can't give him credit just because he stayed on task today.
Yeah, you know, and I agree with you. So, you know, while some agents compare themselves to the low bar, oh, you know, I'm good because they're so bad. You can't think that way. You got to compare yourself to those that are better than you. And what can you do to be better than them? And so a very difficult question that most agents can't answer is when I say, what is your value added benefit? They sit there and go, I don't know. I mean, I'm a really good person. I'm honest. I'm reliable. I'm smart. I know the market. I go, you know what? No extra credit for that. So give me your value add. And you go, I don't have one. So you need to have one. You need to create value added benefits in terms of working with clients. And we try to bring that to our realtor partners. So when a buyer or a seller says, why should I hire you? You're not saying the same things that your competition is saying. Because at the end of the day, if you do the same thing as your competitor, the only differential left is what? Just your name. The price. And I'll go with the cheaper solution because, you know, you're the same as them, let's go for less. So you have to really be able to articulate that and be very tangible in your delivery. And I think, you know, that's kind of what we think the future, and not all that, and that's what the business is being able to answer that question. When it comes to prospecting for new business, you know, again, I think we get relaxed, we become overconfident, you know, we have things happening and, you know, we don't really think about what tomorrow's going to bring. So I often ask real estate people, what's the most important thing in the real estate business? It's to get what? Referrals, right? I hear it all the time, and I disagree. I absolutely disagree.
You disagree?
The most important thing is not referrals. The first most important thing is prospecting. The second most important thing is referrals. Because what if your referral base isn't perking opportunity for you that month? If your referrals aren't giving you referrals that month, you are I call it OOB, out of business. Shit out of luck. You're out of business. So if you rely upon referrals, that's wonderful. But top producers always are prospecting, and referrals always are there. So most agents don't prospect. If I asked everybody in this room here who's knocked on the door of an expired listing or who called up an expired listing, most will tell you they've never done it. Who here's knocked on the door of a for sale by owner? Most will tell you they've never done it.
Really?
Yet they're the two best opportunities that are out there.
Exactly.
What's that?
Yeah, I'm like, wow, of course, that's a no-brainer.
It's a no-brainer.
Is that
but, you know, but let me tell you what.
If you look at last week's course.
I'm sorry, my mother listed her house for sale.
Yeah.
A substantial price. And once that listing expired, we got phone calls after phone calls after postcard after postcard.
It's like.
Once you're expired.
Once it expired, yeah. I think it's illegal if you do it while they're.
How many phone calls you get?
I picked up when I
Yeah.
was at our house,
Yeah.
I'm gonna say about 6.
6. Now,
And
there
then
are,
you get like postcards.
just so you know, there's 15,000 realtors here.
Yeah, I
So the reality is,
know. Long Island.
6 divided by 15 is even that number. So what I'm telling you is that, but a lot of people that call you expireds, they don't really have a script.
No, you know what they say?
I have a buyer, right?
I'm like, really? I'll tell you what, I'll give you the exclusive.
Yeah.
I'll pay you 3%. Have them closed, it'll be done in 30 days. And I never paid phone call again.
Yeah.
You know, crazy.
But you should never do that anyway. That's a huge mistake to sell. So yeah, that aside,
Yeah,
you know, but that aside, you know, you need a different way to approach expireds, a different way to approach business, and those are some of the kinds of things that we teach our agent partners how to do it, to go out there and be effective. So, what questions can we answer for you? What can we answer? Any questions?
I'd like
Is there
to
a
hear a
membership
little bit about the.
on your website?
Yes, it is a $50,000 membership to register. There is no membership to be on our website. Our website is strictly, you know, just informational, but there's no membership fee to do business with us. We work on it.
No, so we would basically anytime, because we are not a mortgage brokerage whatsoever.
Yeah.
So we would be referring our business for any conventional stuff. We'd be calling these two guys. over
Yeah,
here.
yeah, exactly.
And, you know, because the guys we do have are in Jersey, so
Yeah.
we did need someone local, which
Yeah.
is why Jason
Oh,
Brown, who's the broker.
Yeah, I mean, we do New Jersey and all those places, but, you know, we recognize that you have relationships with other bankers, and that's healthy. You know, we always used to say to our realtors, we say to our realtor partners, recommend multiple people to your client. The one who wins at the end of the day is the client, right?
Client.
There should be
Because
multiple
it's all we
competing.
care about is just getting.
That's all we care about,
Do you
so,
do foreign nationals?
yes.
Yeah.
To what LTV?
Usually it's about 60. There are
Interesting.
programs that would, 50. Usually it's 50. There are programs out there where we can get it up to 65.
Do you need a social
Fantastic.
security number? These.
You either need to have a social security number or a tax ID number.
Okay. Pay taxes here.
No, if they pay taxes here, we can do it as.
No, I'm saying, so some people, you know, they work over here, they come here, they pay taxes.
If you file a US tax return,
Yeah.
you can be done as a conventional loan, no need for foreign national, up to whatever LTV you want, depending on the program you take.
Does anyone have any questions before I go in on underwriting guidelines? No?
What LTV, what is that?
Okay,
Value.
loan to value, so that means, if the property is $1 million, the max loan, to value, so the max loan they'll give you is 500,000, and the person has to come up with 500,000 cash, in that scenario.
It's a percentage of the loan relative to the value. So if, let's say let's make the numbers easier, $100,000 purchase price, and somebody's putting down $20,000, that means they're getting an $80,000 mortgage, so that's an 80 LTV. If they were putting down 25%, that would be a what? 75, give this man a bottle of champagne, 75% LTV. So it's a loan to value of the property.
There you go. So, I usually do 100, but since we're in New York, you can't do 100. No, 100,000 as the
Oh,
example,
yeah,
because there's
right.
nothing anywhere close to that in New York.
You're lucky if you get a million, right?
Yeah,
In
right.
Pennsylvania, you'll have that.
Yeah, Pennsylvania, so.
60-40.
Because I usually go anyway. All right, so aggressive underwriting guidelines. You talked about something that is
Yeah.
so new that I don't know anything about, which is that buy down you were
Yeah.
saying, and
Yeah.
can you elaborate on that?
Well, a couple things. In terms of aggressive guidelines, the mortgage industry has changed, and I think it's important that those that are not heavily ingrained in the residential, market, it's important to know that, and I'm talking about consumers that are ingrained. You know, we're coming out of a mortgage crisis. In 2008, the world changed. So the industry changed dramatically over the past few years, and the days of doing mortgages, there used to be mortgages that were called no income verifications, no doc loans.
Yes.
They don't really exist anymore. Today you have to do something crazy, like you kind of have to qualify for the mortgage. You kind of have to show people that you can afford it. And while there are exceptions, obviously, to every rule, the entire industry has shifted, and it's got to be a common sense approach towards doing things. Common sense is no longer, well, they really want the house. Common sense doesn't mean, well, she's a hairdresser and she's driving a Mercedes, so therefore she qualifies.
Yeah.
Things are different right now. So there really is no such thing as aggressive underwriting. It doesn't exist anymore. And there is no bending of rules. They are what they are. And anyone who comes in here, whether it's us or anybody else, telling you that we can do lots of things that other lenders can't, they're just lying. there are things that we can do that other lenders can't, but it's not because we have exceptions. It's because we understand the rules better. We understand deeper how things can be interpreted in terms of guidelines. And that's really the differentiation. It's who understands guidelines and who understands the interpretive process. Many of your other institutions, which will remain nameless, again, mortgage banking is a small percentage of their business. Many of the people that work there are salutarized. They're not commission-based. So they have no incentives to get to 5 o'clock any better. As long as they survive another day, they get their paycheck. And that's not how an environment like ours is. These guys are compensated for succeeding. And that's a good thing. It's kind of like it should be. You know what I mean? Like it's a good way for the consumer to get what they want. So, that's kind of what it's all about. That being the case, there are many things that we can do that some of the lenders choose not to do. Some of the lenders choose not to do certain things. They choose not to deal with certain products, not because they can't do it, but for whatever reason, and I don't want to bore you with the reasons, they decide not to. And it's often until the client is deep into the transaction does they realize that, this is something that we don't want to do. It's the ability, this business is the ability to assess situations quickly and early. That's what consumers want. They don't want to wait 3 weeks to find out that there's a difference. They want to wait 3 minutes. And that's really kind of how a company like ours.
So what would be the right process to go about saying,
Great question.
hey, I have a client, they want to buy this property. I always teach, I used to be a mortgage broker in Vegas, and I was a mortgage banker for one of the subprime, a few of the subprime banks.
So you were around in fun times?
No. So let me get it finished. So with that said, I know that it's a whole different ballgame today. I've been out of the business for 7 years. And we will just go ahead and refer you those clients. But what I like to do is not waste your time. And by not wasting your time, it's important for us to teach and know what's acceptable and what's not acceptable.
Make it incredibly simple for you.
This is where the training comes.
Well, it's even for you. It's not about wasting our time. You can never waste our time. It's not about wasting time. And I often say if somebody's time is wasted, they've allowed their time to be wasted. There's a methodology in the mortgage business. It's called, have you ever heard about getting a pre-approval letter? You ever heard of that word? Don't ever use it again.
Okay.
Scratch that word from your mind. There's no such thing as a pre-approval. Other lenders will tell you they pre-approve them. We don't work with the pre-approval mentality. That's a 1989 way of thinking, although many companies do it. We work with what we call an LPDU finding assessment. LPDU finding is a higher bar of approvability. It's an internal assessment between what we like to call an automated industry to allow us to know that the buyer is going to get approved and the buyer is going to get closed. So how do you get an LPDU finding? What you do is that when you have a buyer who's coming into your universe, they want to meet you, they want to, the first thing you should do is you should say to them, I'm going to have one of our financial partners call you. And what'll happen is one of these two individuals will call up your buyer and introduce themselves and say, take care. We are here to kind of provide you with a value-added benefit. We're going to run you through our LPDU finding system, which is going to give you a much better assessment of your ability not only to get a mortgage but to close. That LPDU finding system is free. It doesn't cost anything, but what it does, it allows both the buyer and you to now know that the time you're going to spend with that buyer is going to be worthwhile time, that the financing isn't going to be a reason that's going to stand in the way of your commission check. So smart agents do this up front. Many agents do it after they're in contract, after they've shown 10 units. They've spent all kinds of time and they find out, oh, these people can't get a mortgage. I don't blame the client. It's your fault because you didn't take advantage of it. So you can use this service as a way to make your time worthwhile investment.
So what makes it more pre-approval?
Because a pre-approval is a loan officer who speaks to a buyer, runs their credit, looks at a credit score, has a conversation about their income, a conversation about their assets, and issues you a letter. The problem is that the difference between what they say and what is verifiable is night and day. An LP or D finding is a conversation with the buyer. It's the running of the credit, but it's the collection of very limited documentation, then run through this automated system that tells the lender that this loan is approvable and is saleable. So it's a completely different vetting.
So the borrower pays for that?
Zero. Borrower pays nothing, no one pays anything. It's a smart thing. Costs the lender money to do it, costs them time, but it's the best time investment. And to get an LPD finding, it does take a while. It takes maybe between 6 and 7 minutes. So you gotta hang in there, and you get this documentation, you can roll with it.